So now we can go for BTC. If we go for 30 minutes, so as usual, BT is also no change. Yesterday, of course, if gold is going upside, or BT should not go down. It will also go upside. So, but there is a chance of time. There is time little bit here can consolidate like 1,000, 2,000 points. Anyhow, it will break this 80,000 resistance level. Then after we can go for I set a target for this week, which is 83,000. Of course, stop loss should be below this level. Here I'm just maintaining is 1:2 ratio. So let's see. So what about gold? So what's our opinion? Whether it is gold will fall, will go for up for other upside. We need to wait. If this does, we can see just 1 2 to 3 hours, or at least European markets. Let's say after you see the European markets, so then we can decide whether we have to continue this pending position or not. If it is European market results will make different, then after we need to change the strategy and we need to draw the some other levels. So it will next 2 to just maximum 1 or 2 hours. We can wait whether gold will come back or not. So we need to discuss some kind of points in the market. So where this gold is impacting. Just gold current price action. Market. What's the price action? And listen, we need to discuss price action. Yeah, as you know, people. So today gold. It's sharply today gold with spot gold up over 2% as markets recover from a prior sell-off. And making a stabilization after heavy volatility, and buyers are stepping in near recent close. Despite the rebound, the market recently saw one of the biggest single-day decline in decades. It's triggered by a shift in expectations around U.S. monetary policy. And second one is macro drivers of Fed on yield dynamics. Whether we're talking about yield dynamics, yes, Federal Reserve policy expectations remain the dominant theme of XAUUSD's gold. Have pushed forward, especially around the nomination of Kevin Walsh as a new federal chairman, has reduced expectation for early rate cuts and strengthening the USD and pricing the gold earlier in the week. So this is a almost second point, and but the markets are still pricing in at least two potential rate cuts later in 2026, which blast on non-yielding assets like a gold over time. And this push pull between tightening expectations and easing bets in generating high volatility in the gold price right now. So sales lag is going upside. Yes, as I said, it should calm down. Maybe I'm waiting for it's going down. Down, down. The second. If it's coming to the geopolitical, goals funds role as safe haven asset continue to be relevant. That should be. And geopolitical tensions in multiple regions continues to underpin safe haven demand, even as the trader or digest macro data as well as Fed signals. Fed. Ongoing global risk like or trade disputes, emerging market instability, and the currency uncertainty keep investors are allocating to real assets like gold. And the third important factor or cause, you can say forecast. Forecast from not for me, not from any individual traders. Forecast from institutional investors or investment banks. So this is our forecast. People will trust more likely in institutional investors. In fact, major institutions like JP Morgan forecast gold price potential reaching 6,300 ounce by end of the 2026. Is it driven by central banks purchase and continued safe haven demand? Definitely, if they said earlier also they given the forecast 5,000 level, it is reached. So now again they given 6,300 by end of this year, maybe by till August or September or October, whatever maybe in these 3 months, so we can see the gold almost 6,000 and above. So already it is reached 5,800 that level, but soon we can see again 6,300. So gold is still a valuable asset. It not will decline even after the recent correction. See or recent correction like a structured bullish thesis remains. It's supported by central bank reserve diversification away from fight. Demand for huge edges as inflations and the future price is also going to rise. So see, you see, it's just for technically, you can say not technically, not fundamentally. The goal is very, is a very sensitive matter, especially for this in these platforms. So whatever the news, whatever the gossips coming in the market take big decision. So like last 2 to 3 days, how it is falling. Now you can see the gold is correcting these positions and going back to 5,000 level. So maybe this is the level like a 4,000, sorry, 4,800 or 5,200. So this is a 400 points is a consolidation points, whether it will continue in this range zone 1 or 2 to 3 months. So then after again, it's the gold may can go travel towards the 6,000 all time high again. And we need to focus, this all the parameters, all the focus estimations, whatever it's a probability, everything will be changed. So what factors will change, you have to keep your mind. So that is one, us data, us deleted data, whatever it may be, it is cpi or inflation or non-farm payrolls as fomc minutes, I mean data times, or else first speakers, any policy updates, any hint on timing or magnitude of rate of cuts, geopoliticals like trade tensions, Middle East developments, emerging market rates. So volatility around these events can cause sharp move in gold. Also stay tuned to the data calendar. You have to focus on data calendar. So in conclusion, we can say gold as is stabilized after sharp pullback. The micro picture remains fixed, and the long-term pull narrative hasn't broken. Watch the Fed outlook, economic data, as well as geopolitical headlines. So these will be your core drivers for the price action going forward. So we have to keep in your mind these are all the upcoming datas. So we have to watch the forex factory. So whenever you open your chart, before open chart, you have to focus on your forex factory. What events are ahead for the day, for the week, for the month. So about this data. So now our chart it seems like sweet and tempting for towards 4900 directly, like yesterday what we have discussed. But as a trader, if it is pull back like 4 5 at least. 4,800, 4,000, sorry, 4,800 or 4,780 in this level is good for buys. Maybe looks like I just messed it position. No problem. I'll let it go. How long it will go, where it will go. So definitely we need to reanalyze. Then we can enter the market. It will take some other times. Here seems like it is going target towards our 4900 first, but then after they can pull back chance. So in this entry level, no need to worry about this. Uh, so we can wait for 1 more hour and we can see the market pattern of the European statistics. So then after, or we can rethink about entry price levels. So maybe it will take some more time. Stay tuned. I'm just going to off this session as of right now. So I will get back to you within few minutes. Thank you.